Welcome back to Synaptic. Today we are going to learn a little bit about reporting and how the reporting system works. So what we'd like to do here is we'd like to take you through the various types of report that's available on the system. Some of the reports that I will indicate to you will work for you or won't work for you, or are made for you or not made for you. So we will select obviously on the company setup when we onboard you as to what reporting you would be available to you. However, for the most part, you are going to have 4 basic reports. So let's just go into the reporting section of the system, and you can click on Master Reporting, Master Reporting. The system is going to warn you that you're entering and pulling popular data. Now remember, when you pull a report, this report pulls down in the format of either CSV or Excel or similar text file, or whatever the case may be, depending on the type of report you are pulling at that exact moment. So you will be able to save these things to local machines. So it's warning you that you're doing this, unless of course we've predetermined that this gets set up to a NAS drive or something like that inside the company. So you are downloading data and you are able to disseminate that data, and this is why generally in most companies, for security purposes, your USB drives are going to be disabled, and you may not be able to attach, for example, Excel documents to emails. In fact, you'll have an entire training based on that, so you don't disseminate data to people or random strangers that do not deserve that data. So it's just a bit of a warning, and every time you click OK, it marks it on the system as a tracking device saying you have ticked OK. So when you look at the reporting screen, I'm going to start top right, okay, at the report type. And as I mentioned before, there are 4 basic reports that you will have. And you'll always have a data report, the financial report, you will have a fund report, and the claims report. Those are the 4 base reports that you will always have on your system when you enter into an agreement with Synaptic. So, data reporting. When you are doing reporting, it's very important to note down here we have the report data filter. So here you will see immediately that we have looked at, as it stands, as we've opened up this report, the policy initiation date. That's what it's going to pull on. Now, when you go into the policy status, you will find that you have a variety of different types of statuses to pull. So if I change that from all statuses will pull and sort on initiation dates. In other words, when the policy starts, whether that be yesterday, today, or tomorrow, that's going to pull on that date. And when I change it to pending, for example, it changes it to policy quote date. Now, in my life, in the system's life, the policy quote date is the date that we received it from the insurer. So in other words, you haven't activated it yet, or you may have activated it, but effectively you haven't activated this policy yet, and we do not have a date whereby you've either invoiced or the policy has been incepted yet. So effectively, when you're looking at pending data, you are pulling on policy quote dates. In other words, the date it hit our system. And this type of report, as it stands right now, like this, data report pending, policy quote date, forms the basis of what we call the recon report. So you can pull this for a dealership, so you can go into your selling dealers and go pull whatever dealership you want to, whatever dealership belongs to you, and you'll be able to run a report for that dealer saying, hey, Mr. Dealer, these are the policies that we've got in our system for this week. Are they accurate? So you could do a recon report with the dealership like that. The data report itself will give you enough data that will show you the client's name, the client's address. It will give you the basics of the vehicle, the policies that the guy bought, may it be 1, 2, or many, and then also the financials. In other words, the sales price to the payover fee. So that's what the data report gives you. So it's a report you can send to the dealership because it contains no other fees past payover. Now, payover is basically what the dealership will be paying back to you. So it'll strip out their commission and their VIF, which is shown in this report. So it's a nice report to show the dealer what their earnings are or what their potential earnings are. Or if it's on a pending situation like this, you are then able to allow for a reconciliation between what is real or what needs to be removed. Let's look at the other ones. The other one is current. Now, current for me is the one that you're going to most pull on, and this is always going to be based on policy reconcile date. So when you look at this particular report on the policy reconcile date, what's going to happen is we are going to pull all the data within the month that we have set it. So in other words, on the report filter, so date between, to and from, or for a specific month, May 25, for example, and clear the dates for the time being, we're going to pull on those dates within that reconciliation period. So it's going to look at the recon dates, the date I did the invoice on, the date that it becomes live. Now, this could be the invoice that you've done either manually or that you've imported through Debella or VAPS Consulting Systems, or that you have manually allocated. So that's what's going to happen here. This is not necessarily paid data, this is invoiced data, and that is what's going to happen there. Now, the way I like current and the way I explain current is that if you pull a current report all the time, no matter whether I pull it now or I pull it in 5 months' time, the data for whatever that date range is going to be will always remain the same. It's never going to change. Even if the policy has been credited, expired, has come off book, come off reference, you are always going to see what you're looking for on that particular report. The difference is reconciled. Now, it also stays on reconciled date, but the difference here for me is reconciled means active only. So if you choose reconciled and you pull that report, you are only going to look at the active policies today within that date range. So if the thing has been cancelled, has come off book, expired, whatever you call it, not taken up, credit noted, it's not going to show on the report anymore. So although your report will be close to, because you don't have that many policies expiring or coming off book for that particular period, you may have 1 or 2 cancellations. So your report will never balance back to what you pulled originally, but it will give you active data only. In other words, stuff that is currently sitting that is active on the cell at the moment. Let's move down to unpaid. So now what that'll do is still on policy reconciliation date, but this is going to pull all policies that have been set into motion, have been invoiced, but have not yet been paid. So this could be utilized as a debtors report. And there's another debtors report that I can show you later, which you can distribute. But for now, this can be done per dealership. You've also got cancelled. So that changes it to policy cancellation date. So in a previous video, we have explained the cancellation process. Now, it's important to note here the policy cancellation date. Remember, in that video training, I said to you, there are 3 dates for a cancellation. The date you processed the cancellation on. So in other words, the authorized date. The cancellation date, which is the date the insurance company or the finance house requested the cancellation, which can be up to a month behind. So in other words, I write off my car tomorrow afternoon, goes through the process, has to go salvage and recovery, maybe some assessment. Once the bank has decided to write it off, at that point they say to you, look, the car was written off on this day, but we're only giving you the notice on that day. So it can be up to a month behind. And the other cancellation date is the authorized date, the date processed. So it's the authorized date, date processed, and the cancellation date, which is the requested cancellation date. So that's the date that was requested or where your finance calculation was taken from. So we do it on that cancellation date, and that's where we have the policy cancelled. Paid only, we'll look at policy paid date. So it's only going to pull policies that have a paid line in it and where there is a positive paid date. So if that policy does not have a paid line in our database and has not been paid or doesn't have a paid date, it's not going to bring it through to the report. So again, all these reports that I'm showing you, other than current, will be what we call flexible reports. So in other words, they're not going to be constant. If you pull the same date range and you change these things, they're never going to stay the same. They're going to change as they go along. If it's paid only and you've got a credit line in the system, it's not going to show you the system. It's not going to bring through the report. Credit noted will get you the credit note approved date. Now remember, again, I say it's on the approved date. So now you might want to see what work you did in a certain period, because now your approved date is going to be the date you physically actually pay the policy out. So for cash flow and control, you could use credit notice as opposed to cancelled. Expired will obviously give you a report on the expiry date. Now, technically, most things will expire. This report will stay pretty much constant. If I pull an expired report for 2024 now, and I pull it in 5 months' time, it's still going to stay the same. However, if I'm going to pull an expired policy for October now, and I pull one again at the 30th of October, it might have increased in size, because in October, I'm going to have a certain number of policies that will end up expiring through the month. But once the month is over, you'll know it's going to stay pretty much constant. But again, it's not an exact report. We always like to say, where possible, if you're not looking for specificity, so in other words, you don't want expired only, you can go current and then sort by expired date. And that will give you a much more current or much more accurate thing, but it's a bit more hard work. So we allow you all these different options. So to give you a bit of a lesson here, I'm going to go back just by 1 month. I'm going to go up until today's date. I'm going to look at all policy statuses for now, which will be on the policy initiation date. And I'm going to look at the selling dealership for, let's say, Llewellyn's Motors. Okay, this is how I manage my reports. And I'm just going to say generate the report for us. Do not want to save the mark values. I don't need a reconciliation. Go. Okay. Once the report is pulled, you had the options, please understand, to pull either with master data. So if you're going to send this report via email, we suggest you always say master data yes. But now you've also got the option to either save it with a password or not. Now, usually would say yes, but because I'm just doing demo on a demo system, I'm going to say no. Maybe I need to manipulate the data or do a pivot table before I send it. So we're going to say no, and we can then apply a password later when we are ready to send. So this is the report which we call the master data report. So like I mentioned before, the only issue that I have here is that this should not be numeric. So we can just go and update and amend that with a little bit of a apostrophe in front, so make it a text. Now you'll see that this dealership has got literally 2 policies that were sold to it in that time period. And what you're going to see here is the policy number, the platform reference, and the date to sell. These are columns that are pretty much constant throughout all of our reports, and each report will be different. So you're going to look at the region, the selling dealer ID on our system, and the selling dealer's names, the registered and the trading as name, the dealership registration number, so all the dealer details, including their phone number, who the dealer principal is. Let's just move that down a bit. And then also looking at the dealer consultants, the VAT registration and the VAT number, etc. We also show you the IGF number or the DeBella code that comes in there. And if the dealer's been set up properly, your Signio Ceriti DeBella DealerNet will filter into here to show you what is happening on that. We then give you a host of client information on that particular file, including the address details, ID numbers, etc. And then we go into the vehicle detail of the client itself, chassis, present vehicles, color, and that. Then we go into the product information. So we can give you all the product information, initiation date, start date, product category, warranty, reconciled months, reconciled years, the date of the invoice. We also at some point give you the sales price, commission, inspection fee, payover totals, and everything else. We then show you the invoice number, paid details, and when the paid date was. In other words, this last one here has not been invoiced yet, so we have that invoice to be done marking. And you'll see the total amount paid, total amount outstanding, and then it just goes into complete the report to tell you, is it a new or used vehicle, is it a finance, is it financed, etc. So that's what the basic sort of master data report gives to you as a basic reporting mechanism. Now I'm going to do one more thing here, and I'm going to say to you, I'm going to change this up quickly. I did it on all statuses. Now if I go and I do current status only, and I regenerate the same report, that instead of 2 policies as in the previous one, I now only have 1 policy. Why? Because I'm pulling on policy reconciliation date, which means that that policy is not live. So it's a pending policy, and we don't normally deal in pending policies unless, of course, we're doing a reconciliation of whatever the dealership has sold. Now, that's the difference between all and active. So just to recap on that, our first one was done with all policy statuses. So in other words, I was using the initiation date of the product. So it's putting through every single thing happening on that dealership. You don't normally use that. You want to normally utilize current, which will show you all activity on the dealer that has a financial background to it. So in other words, it's either been invoiced, credit noted, it has been claimed on, something has happened in that policy's lifespan that you will be reporting. And this is a recurring theme through all of our reports. Looking at the financial report, exactly the same thing occurs. As you shift between the different strategies here, you will see that all of these things will change depending on what you're looking for. So again, it is vital to note that this is not just put here because we felt like taking up, executive land space. We wanted to actually show you what we're pulling on, and that's what that particular column shows you. But again, I'm going to go current. This is now the financial report. I am going to do the same thing so that you can have a look at it. And we're going to say generate report. Again, I don't want marked values. I want to show you what I'm doing. If you do select the password, it puts it into your copy system of the computer. So you are able to then paste it back into the report. It's going to ask you for that when it comes up. But then you can also paste it into an email. So what we usually do when we're putting up big reports for insurers is that we'll do one email saying, please note the password for the file that you requested is this. Send the mail. We'll then sit here, get our report, and we'll do whatever we do, manipulation, etc., maybe a pivot or a barcode or bar graph or something, and then we'll send it to the client with that password protection so that you're not sending the password and the file together. That would be a security risk. You could also post that into a WhatsApp if you've got WhatsApp for desktop, and you are able to then send that to the client. They've got it on a secure platform. Remember, WhatsApp for desktop is actually very secure to send information through. So now once that's done and you've opened up the financial report, again, you're going to notice something slightly different here. The information for the dealership is a lot less than what you had before in the other report. We do, however, include the dealer consultant now, because now you want to know who is the salesperson to that dealership from your point of view. We do things like DBELA codes, IGF numbers. Your client information is still there, but remember, it's basic client information. So we don't have addresses, for example. And then we've got the product information as well that we give you. We give you the start and end kilometers, a little bit more on the warranty side or sort of your risk management side, and then we go into the categories, reconciled months, invoice numbers, etc., accepted statuses, and then we look at the financial information. So what you're going to see on the financial report is that we expand heavily on all your financial information. So as I go down this line, it's going to show you the commissions you've paid, the VIF you've paid, your insurance premium, your payover as listed, because there are two different payovers, your risk reserving, UMA fee, insurer fee, claims admin fee, marketer fee, sub fund, discount applied, third party payment fees, and then total payover. Now, I'm going to draw your attention to these two columns here. Payover as listed is what you're expecting as a payover. Now, payover including will be this payover as listed subtracted the discount, the bank charges, and third-party payment fees. So that's what affects these two different payovers. Now, in 90% of cases, DBELA fees are either covered by the contractor, the person buying the car, or it's covered by the dealership when the dealership's being charged this directly as a bank charge. Now, the reason this is set up like this is that some cases the dealership refuses to pay for the third-party fees, and this is borne by the UMA. It's not very frequent these days anymore. This is legacy system stuff, but if you've applied a discount, or there might be a rounding error, from one system to another, you're going to find it under discount or bank charges. And from there, what's going to happen is that will then adjust your pay over including that you are getting in AZ and BA, because AZ and BA will be your pay over including and pay over excluding. So that's the only difference between the two. So that if you are doing a reconciliation to your bank account of your fund holding account to what you've to your actual report, you could probably use the pay over including and excluding here, because you may not, if they are deducting any charges, you're not going to balance back to the pay over you were expecting. So that's basically that. We also give you the VAT percentages. So if you're over multiple VAT periods, you might have different VAT percentages. The other reason we give you VAT percentages in a couple cases here is because your insurance company is going to double check that your VAT percentage on average is right. They're also going to double check that your commission percentage is right. And if I think correctly, no, we don't, not in this report. So in the financial statement report, for example, you're going to have a commission and commission percentage. So we actually split that up to make it easier for the insurance company. So that's in the financial statement report. Once you've gone through all your financial information, you're then going to get into, for example, the paid information, payment date, your reference numbers, the amount paid, etc., etc. We also get very heavily into the credit note information. So you'll see here from BI onwards, or from BH onwards, that you have a complete amount of credit note information that comes through with that. Now, one thing you'll notice here is we've got column BM, which is credit note VAT losses or gains. So this was or is usually at a zero value, but what we've kept that column in for, and this is both on credit notes as well as claims, and you'll find there that we utilize that particular column so that if you are doing a credit note on a policy that was invoiced in a different VAT period, that this will then track what the small loss or gain would be. Now, luckily for us, the last VAT change was from 14 to 15%, which was not too bad. So the VAT losses or gains were minimal. But for example, this year in 2025, they were contemplating doing a VAT change to 2%, so from 15 to 17. And that would have obviously made it a little bit higher, but someone has to carry that loss. So we created this column so you could create a contra in your accounts in order to allow for that type of change. After that, we just give you the basic information of your facility ID or cell ID, and we then go into credit note reasons if there was one, and then we list a whole host of your roadside assistance information at the back of the policy depending on what you do for this particular thing. I give you a chassis or VIN number. Sometimes you would like to tie the information, get one full report where you're merging, for example, your data report with your financial report. So I've got you a chassis number so that you can do a VLOOKUP or cross-reference each one. And that, for example, is your financial report. The other reports then have a look at is your fund report itself. Now, your fund report can be done through all statuses and can be done on a variety of different things. Now, for fund reports, there's only one thing I'd suggest that you do differently here. Now, I'm going to pull one. Again, I'm going to pull it on current. And you can then decide on how you'd like to pull it. I'm going to minimize it by just saying Llewellyn's Motors. For now, you would not normally pull a fund report on a specific dealer. You might put it on a group or whatever, but that'll give you a fund report for that dealer. In other words, the profit, losses and gains on that particular dealer. We have pulled one for Llewellyn's Motors. Now, you can pull for individual dealerships this way to gauge their profit and losses, but I'm going to show you two different ways on this report to gauge the best way that you can handle it. We've pulled this. We're going to say we don't want to save with the password for now. Let the report print. This report will take a bit longer. I've said this before. I'm going to say it again. We've only got one line in this, so this really doesn't take too long to pull. But the issue is when you've got multiple lines and you're doing 1,500, 2,000, 4,000 policies a month like some of our clients, this report will end up taking you a little bit longer than usual because we're doing a calculation per line, and I'm going to show you where that sits. Again, like I said, first three columns are always the same, nothing ever changes. It is literally your platform reference, in other words, what the Ceriti or Signio code came through with, and it is your policy number. You then got the the data cell, and you got very limited dealer information. You got very limited information in terms of anything else. So you go straight into your product name. So in other words, the product that you are busy selling. So you're going to also see here that in this report we include product category. We also include the term. We include basic information like sales price. So quite a bit of financial information, except I'm not really giving you all of the different informations like the upfront earnings. That we've got covered in the financial report and my dealer data report. Now here we start immediately at your payover, and we also go into gross written premium in some reports or some iterations of this report. We then give you the percentages of that. We go down into the total claims count. So this is the first time you're going to see an accumulation of how many claims, what the claims values are. Same thing with credit notes. Credit notes and credit note values are shown in this report too. And then we start coming to the interesting calculations that we're talking about later to help you predict and understand how your fund is going. At the moment, because we have no claims and no credits, our burn ratio earned and GP are at 0. But we've got EPR and UPR. EPR means earned premium. Although everyone or Guard Risk does this very differently, but the way that we work with most of our insurance companies is that we earn premium on a day-to-day basis. Now remember, it's not necessarily premium, it's EPR, so we are calculating out of the fund. So now remember, your risk reserve is what's left after you have paid all your commissions. So that is UMA commissions, that is broker commissions, VIF fees, insurer fees, everything else. And that's why this report revolves severely around your risk reserve. So this is what's hitting your fund finally after you've paid everything out to everybody that's owed money. On the earned premium, we are literally doing a calculation in here to earn daily. Now, every time you pull this report, the earned premium is going to change each time. So what you're effectively going to have is, while the policy is running every single day, this policy is going to go up with a certain amount of money based on the calculation we put in the system. It will deduct that amount of money from what's left. So let's say, for example, you sold the policy today. There will be 0 in earned premium, and there will be an earned premium that will equal the amount of your risk reserve excluding. Now I'm using excluding figures here only, although we do include including. I'm using excluding figures because you've already allocated the VAT. This for me is where the magic happens. This earned premium is what you're going to declare on a month-on-month basis as your income tax. So yes, when you sell your policies for the month, you are going to do a deferred income tax for that month on whatever you've brought in on the main premium amount. So in other words, on your main premium amount. What's going to happen then is you're going to pay out your expenses, deduct the income tax from that, but you're going to defer the balance into a deferred taxation. Then from that, you are then going to earn money every month, and then as that adds up, so on every month, you are then going to then pay out the income tax, which will then reduce your deferred accumulation. So that is one way we work on this. The other way we work on this is we work on this to say, right, this earned premium is what you've got to play with. In other words, the sum of all the policies here of what you've earned is technically what you've got available to you to do claims and to manage your liquidity with. Unearned premium means it's still there, you can't touch it, it's still being earned because this is future dated, you're allocating for the future. So with the earned premium, we've got the final pool earned premium. So in other words, currently you've got 240 Rand, which is the including value. The final pool earned premium will show you what you've earned based on your earned premium. Final pool GP is how much you've got in total. So that's exactly how much. This should always equal exactly what your risk reserving is. So here we've got the risk 402,174. This is going to mimic that 402,174, but as we start playing with this and we start including or incurring claims, or we do a credit note, these numbers here will start to drop either into positive or negative depending on what's happening. So for example, if I now have a big claim of 1,000 Rand, this is going to drop into a negative amount of money by about 1,780 Rand. However, what you will find here is your burn ratio EPR will go above 100%, which means you have now burnt more than what's available in your earned premium available to you. However, at 1,000 Rand, your burn ratio GP won't. So that's going to still remain in a smaller number, not quite over 100%, because you're taking 1,000 Rand on 4,000, so you're only using a quarter of that money, or a little bit over a quarter of that money. So effectively here, your burn ratio GP will be different from your burn ratio EPR. Where does that differ? When your fund has fully expired, these two should then match at all times. So at all times, you can look at what are you burning on from an earned premium ratio versus what you're burning on from the whole fund, or as the fund as a whole. So with calculations done that way, you can do it that way. Now you've got two different columns here called total payable and dealer payout. Total payable will either remain at 0 at all times until the policy is either expired or being credit noted, and then it'll start tallying up. So what it does here is that it works out how much money you're going to pay back that dealer, or you're going to claim back from the fund. Let's make that clear. How much money you're going to claim back from the fund on this particular line item. It is the risk reserve less your credits less your claims. So that's going to be the total payable. So what you can extract from the fund at the end of the term. And remember, if you pass a credit note, it's going to be immediately payable because it's available to you now. Some cases you want to leave it in for a little bit longer. That just helps the liquidity of your fund, but it'll always show you the value that it ended up at that time. Now, if that value here is in a positive, it means you have managed a good burn ratio on this particular product. There may not have been claims, or your claims did not exceed the amount of money or risk reserving you put away. If this amount is in a negative, it means that your burn ratios are more than what you put away. So let's say, for example, you've put away 15,000 Rand as a base reserving as risk reserve, but you have spent 86,000 Rand replacing an engine, which is common, for example, in VW. Then what you'll do here is that this then will burn and your total payable will be in a negative figure. Now, the way to work that out for your dealership is if you're putting this per dealer, you can tally that all together and say to the guy, listen, your burn ratio is sitting at a total of X percentage, which will be indicated by the averages here, but you are in a negative deficit. So in other words, the amount of policies you're bringing in, if you've tallied these all up together and you get a negative still, the amount of policies you're bringing in versus the claims that you are having or the cancellations you're having is creating a negative or deficit within the fund. And you want to make sure that that dealership is aware of that, so we can then make strategic moves to either recost his products or to maybe increase the penetration of what he's selling on the product so that we can get a balance back to our fund. The fund report goes on and just gives you all the expiries and paid dates, credit note numbers, etc. And it'll also tell you whether it's enforced, not enforced, pending, etc. So it just goes on with a bit of more information that you can now start making strategic information or ideas with. If we're not pulling for that, I said to you the fund report can be pulled in two different ways. So if I do it this way, now you look on the screen, I've got no insurer listed, I've got none of these things listed here, and I just go generate report. It's going to pull for all my insurers. It's going to pull for everything I'm collecting money on. Insurance, non-insurance, whatever the case may be, roadside assist, it's all going to pull for the same thing. So we always suggest that you drop down and pull for the specific insurer you are looking at managing at that exact moment of time. Now, be that Centric, Guardrisk, Generic, whatever. You will have them all listed here under the insurer here. If you want to have a look perhaps at a burn ratio on your claims agent, you can drop that down. It'll list all your claims agents there. You may have one claims agent doing your non-underwritten stuff and another claims agent doing your underwritten stuff. So you want to make sure that you select the right claims agent. Usually when we are pulling fund reports, we are pulling for an insurer, not for the whole group as a whole. The only time we pull for group as a whole is if we're pulling non-underwritten. Then you can use this filter down here, select non-underwritten and hit go, and then it'll pull across your entire non-underwritten book. Now this may be because you want to do a payout, it might be because you want to do a reassessment of your book, or you want to introduce a new product and see how much funds there are available for R&D. That's up to you. That you can do all of that yourself, but effectively that is how you're going to pull it in general. You're going to look at the insurer. Now remember, your non-underwritten guys are going to be here too, so you can split that up. Let's say you've got a specific pool for non-underwritten chip and dent, non-underwritten roadside assist. You've got that option to say we can split it up between insurers, and the way you set up your product comes back to how this report's going to work. Now please remember what I just said there. Product, broker administration, product setup. I cannot explain in so much detail that this is the most important part of your entire setup of your system. Set up your products incorrectly, this is not going to work for you. Now remember, when we had a look at setting up your brokerage earlier, you've got the option here of being able to pull for various holding companies or various groups. Okay, so for example purposes, I did do McCarthy as a group, so I can hit McCarthy there. This is just to show you an example, and you can click on that, and literally I could pull out anything for the McCarthy group, and that's on a group name. But you can also say that McCarthy is owned by Bidvest, so I can do a Bidvest company here if I wanted to, clear that out, and it'll pull for all Bidvest dealers, not just the McCarthy group. So you can go ahead and do whatever you'd like on this report, and by setting these filters at the bottom will allow you to change what you're looking for. So either you're looking for a claims administrator, an insurer, a selling dealer. You might be looking for a specific product category that you have established. You want to look at what is my warranty doing versus my tire plan, for example. You can do that here as well. So it'll only look for those certain product categories. You might want to look at what is Cape Town doing versus what is Pretoria doing. Again, you can pull by that, or you can pull by representative here. So you want to check what is Llewellyn doing on a day-to-day basis. How is his work progressing, and does his work match the efforts that he's putting in, and does he need more training? In other words, is he doing well or not? You can then go check and select Llewellyn and see, right, these are all of his policies, and this is how his patch is performing in profitability or not. So that is the basic setup on the reports. That's a little bit more information on fund reports. The last one really is claims report, and here again I would always go current, and then I would check your status here. So right now, if you do not have a claim status in, it says claim date, so that's your registered date. Pending stays at registered date. When you go to authorized, it goes claim authorized date. And when you go unpaid, it goes to claim authorized date, but looks for no payment of that claim. So it's very, very, very similarly put. Repudiated date is the date that you repudiated the claim on, and then cancelled the date that the client requested a cancellation of that claim. So nothing really changes in terms of the rest of the filters and the setups, but this is how the basics of the reporting mechanism works. Ladies and gentlemen, thank you very much for listening today. We really appreciate your time, and I hope you've learned something. See you next time.